Today we see a continuation from the rejection from resistance, and we did fill the gap to the downside. Is the market getting ready to bounce, or are we about to see some high volume selling? First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was down 1.53%, and we did fill the gap to the downside, which was right here around 398. And we did continue that rejection from yesterday from the resistance around SPY 407 to 408. Now keep in mind, we filled the gap to the downside and we did not fill the gap to the upside. So there's a very good chance from this gap fill, we are going to find support and then start marching higher towards the gap fill to the upside. Now, whether or not we need to go down a little bit more and retest the 200 daily moving average or go straight there now is to be determined. And as I always teach you, let the price action do all of the talking. And right now we did get a breakdown below SPY 400. So we need to see the break back over 400 to tell us we're going to fill the gap at 408. If you get in the habit of letting the price action guide you, you will have no bias and you will have no care in the world whether the market goes up or down from here. Get in the habit of following price action, which means if you see a rejection from 400, then you're looking for a continuation to the downside back to the 200 daily moving average at 393. Remember, I told you this is going to be a giant trading range between 393 all the way up to about 407 until we get a clear breakout. And right now we had the break down below 400, which meant we were filling the gap at 398. And now we need to flush down through that gap fill to get down to 393. So going into tomorrow, you have very clear resistance and support. You have resistance at 400 and support at 398. You need to break down below 398 to get to 393, and you need to break out above 400 to start marching higher to 408. Let the price action tell you which one, and you should not have a care in the world which one plays out because you should be prepared for both of them. We are getting some high volume, and that is a very good sign the market wants to make a very large move this week because we're starting to get some high volume trading. High volume is going to mean you get a very impulsive move from here, so just be prepared for either scenario and then let the price action do all the talking. You can short on a rejection from resistance at 400 and you can buy on a bounce of support at 398 and then you can trade accordingly. On the NASDAQ 100 triple Qs, we were down 1.23% today, and again we're continuing that rejection from the resistance trend line up there at triple Qs levels of 303. We had the rejection from 303, we broke down through yesterday's low, and the rest is history as we're marching down towards the gap fill at 294.43. That is an extremely strong support zone, so if we go down there and fill that gap and bounce off of that level as support, I am expecting to see a very impulsive bounce that could take us all the way back up to 311 to 313. Of course, that is contingent on the fact that we need to see that impulsive bounce, because if we don't see the impulsive bounce, then we're very likely coming back down to the 200 daily moving average. So it's a very clear trading plan in both of the triple Qs and the SPY. You're either breaking down below today's low to close the gap and test support below, and then if we break down below 294, we're coming down to 290 and the gap fill at 288. We bounce off of the support and the gap fill and break back over 300 and 303, we're off to the races to the upside. Know both scenarios and let the price action tell you which one is playing out and then trade it accordingly. On the Dow Jones, we were down 1.74% today with an extremely bearish candle with a very sharp rejection off of that negatively sloping 20 daily moving average, and we're coming right back down to critical support at 327. Remember, 327 has to hold up for this bull flag to continue to look like we could be marching higher from here. But if we break 327, we still have the rising 200 daily moving average at 324. Price above a rising 200 daily moving average is more often than not bullish, so as long as we hold above 324, it is still possible. This is just a pullback and a correction from the impulse off the October lows that could send us to a brand new higher high. If we break down below 324, we're looking for the gap fill at 311, and if we start to bounce, we need to break back over resistance at 335 to start marching higher back into the 340s. On the Russell 2000 IWM ETF, we were down 1.16% today, and we had a very clear false breakout look when we had that break back over the negatively sloping 20 daily moving average, and we instantly gave back all of those gains and then some and came back down and sliced through the 50 EMA. So IWM below 188 is risk off because we could be going to 185 all the way down to the gap fill just below 181, and that's where we're going to find the rising 200 daily moving average. So do not be surprised if we do go down there and fill that gap, because it is risk off while we're trading below 188, and at this point we need to break back over 192 to get bullish, and the break back over 192 should be the all clear. We're going back into the higher prices in the low 200s. On the ARKK ETF, we were down 1.67% today with that very clear continuation of the rejection of the resistance right around 40.4, and we're right back down towards the support zone between 38 and 39. If we lose support at 38, we're very likely going to 37 and then 35, and we're not getting bullish unless we can get a clear breakout back over 41, which should send us into the mid 40s. On the VIX, we were up 5.26% today as the VIX is bouncing, but we need to see the VIX breaking back above 20 to say that it's bearish. A spike in the VIX is completely normal during a pullback. We just need to ensure the VIX is not getting out of control and spiking out above 20. VIX above 20 tells you we could be heading to much lower prices, so be cautious if the VIX breaks out above 20, and you could get a lot more bullish if it crushes from here. On Bitcoin, we're currently down 1.77%, and Bitcoin is continuing to look weaker and weaker, now breaking down below support at 22,400, and the Bollinger Bands are expanding, which is going to allow it to come down towards 21,300, and then the 200 moving average at 19,700. We're only getting bullish if we can break this resistance trend line and break to a higher high above 23,600 and then 25,000. On Google stock, we were down 1.34% today, and we got the rejection from the resistance right around 95.6, and we did fill one of the gaps below at 93.7, and we still have one more gap to fill at 92.28. We're bullish as long as we can hold above this channel bottom, which is down here right around 90.5, and we do have strong support around 91. The next bull breakout will be a clear break above 96, and then that should start sending us higher towards the negatively sloping 200 daily moving average and resistance between 101 and 102. On Amazon stock, we were down 0.21% today, and Amazon continues that rejection below the negatively sloping 20 daily moving average, and we did break back down below the support at 93.8, which is increasing the probability we're coming down to fill gaps at 92 and 90. Once those gaps fill, there's a very good chance we start heading higher, but if we don't, we could still go back down and fill the gap down here right around 86 or retest the low at 82. We're getting a lot more bullish if we could break above 98 and 102 for the upside price targets at 109 and 115. On Microsoft stock, we were down 1.06% today, and we did fill the gap below at 255 from yesterday's gap up open, and we're right back down towards this critical support zone right around 252. If we can bounce off of 252, we could go fill that gap at 262, but if we break down below the support at 252, we will be looking for lower prices at 246 and 242. On Nvidia stock, we were down 1.13% today as Nvidia is just churning around near this high at 238 and this support at 227. We need a clear break of 238 to send us to 244 and then the gap fill at 258, and we need a clear break of support at 227 to send us down towards the gap fill at 211. On Tesla stock, we were down 3.15% with that very clear rejection from the 20 daily moving average, and you can see these Bollinger Bands are now expanding, so price is very likely coming down towards this critical support at 183. If we lose support at 183, we're going to 173 and then 167, and this is still a very clear downtrend of lower highs and lower lows while we're trading below 197. On Apple stock, we were down 1.45% today with that very clear rejection from 156, and we're very close to closing the gap at 151. There's only about 2 cents left. So there's a good chance tomorrow we fully close that gap and test this support around 150, and if we could bounce off this support, we could retest the resistance at 156. If we can go back up to 156, this could be a giant inverse head and shoulders, but if we break down below support at 150, we will be looking for the gap close at 146. On the financials, we were down 2.58% today, and just yesterday I drew these arrows of where we could be going in the future as long as we're trading below the resistance at 36.3, and we're already starting to see a very drastic move to the downside. So as these Bollinger Bands expand, it could be possible we're going back to the rising 200 daily moving average before we find support and then start back higher. On the industrials, we were down 1.29% with a very clear rejection from what is now our resistance trend line, which used to be our support trend line, which means we could be coming down to fill the gap right around 100.5. On the healthcare sector, we were down 1.61% with a very clear rejection from that channel bottom low, which is right there at 129, and we're getting a very impulsive rejection to come back down towards the retest of the low at 126. We're bearish as long as we're below 130 because we are in a downtrend. On the energy sector, we were down 1.74% with a clear rejection from the 50 EMA, and we're back down below all the moving averages with a bear trend. From here, we could come back down to support at 82.6, and the next lower low would be 80.5. So jumping back over to the SP 500, it is very important to let the price action do all of the talking from here, and we need to see a break of 400 to get bullish, and if we break down below 398, we're instantly more bearish for a retest of the 200 daily moving average at 393. We still have lower highs and lower lows, which is obviously a downtrend from that February 2nd high, So wait for a confirmation of a higher low, higher high breakout if you're waiting to get bullish. And you can instantly get bullish if we can get a clear breakout back over 400. And then above that, we need that clear breakout over 404. So let the price action do all of the talking, which is exactly what we do each and every day on the Stocks Channel Discord. So if you want to come trade with the Stocks Channel Trading Discord community and get access to all of my intraday updates and analysis, you can find out how to join the Discord server by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.